Hey, this is Matt from InvestiQuant. Today is Wednesday, March 17, 2021, and today is the FOMC announcement. So let's take a look at what has happened on the FOMC announcement day when you get a gap down like we are currently seeing developing in the overnight session this morning. So let me go ahead and set that up and discover looking at all four instruments with a setup of entering long at the open, which is 9:30 a.m. Eastern Time, and exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now, currently, we are trading around yesterday's low of day. So I don't know if we're going to open in range or out of range. So I'm just simply going to put gap down here. And you can come in and look at that on your own. When we get a little bit closer to the open, if you want to look at specifically if we're opening in range or if we're opening below the prior day low, those are both available here in the opening area. Next, I'm going to go into indicators. Put us at a similar market environment. We are in a strong bull market environment right now. We're above a 10, above a 200-day moving average. And then I'm going to go into the market events section, and I'm going to say that today is the FOMC announcement. I'm going to grab that from the active today section. Right here in the middle of the market events, we've got several things happening, but I'm going to click FOMC announcement. I think that's the most important thing that's taken place. So I'm going to click on that. You can see it came from our market events category right here. It is added to the test, and now I can hit view results. And here we go. These are the results of going long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, and exiting at the close, which is 4:15 p.m. Eastern Time, when you gap down on the FOMC announcement day, and it has taken place in a bullish market environment. Historically, the S&P has 31 samples for this session. The NASDAQ, just 23, the Dow, 32, and the Russell, 27. If we look at the win rates on the four instruments here, the S&P, 31 samples, 68% of these have closed above the opening print. So that's been a fairly strong win rate. Now, there are only 31 samples, so it's not a huge sample size, but that is a fairly strong win rate there. The NASDAQ has the fewest samples at 23%, and its win rate coming in at 43%. So that is quite a bit different. It is on a smaller sample size, though. The Dow, 32 samples, so very similar to the S&P, and that one has a very similar win rate to the S&P at 66%. And then the Russell, 27 samples, and that one looks very similar to the NASDAQ, so 44%. So we've got two instruments, the S&P and the Dow, which both have pretty strong win rates here, whereas the NASDAQ and the Russell are just a touch weak there with win rates just under 45%. If we look at the average win and average loss, you can see the average loss is larger here in all four instruments, and it looks to me like that is probably a result of some of the recent losses. It looks like the past two FOMC announcement days have been losses, and they've happened in higher volatility, and you can see that there's been a couple big losses there recently. In fact, in the S&P, which I've got the table here below set to the S&P, you can see the last trade. If I hover over this blue equity curve, you can see that big bend here at the end. Sizable loss there. That was $4,500. So that is probably skewing this average loss up quite a bit more, whereas if you were to take that out, the average loss wouldn't be nearly as large. And you could actually do that by going in symbols and settings and changing the date range to just push it back to where the last trade or the end date would be right before that. You'd be able to kind of see what it looks like without that in there. But regardless, with all of the samples in here, you can see the average loss is a little bit larger here for the S&P. It is larger for the NASDAQ. It is larger for the Dow and larger for the Russell. So the bigger moves have been on the downside on average. And if we look at the win rates, if you average them all up together, they'd be a little bit favored. But more noticeably in the S&P and the Dow, it has been favored, whereas in the NASDAQ and the Russell, it's been just a touch weak. So hopefully you found that helpful. Good luck today, and we will see you next time.